On today's hot sheet, I'm discussing the week's housing inventory update, Friday's employment report, and a roundup of 2025 housing market forecast. Today is Monday, December 9, 2024. I'm Byron Lazine, and the hot sheet starts now. Good morning. Welcome into the hot sheet. Let me know in the live chat which market you are tuning in from as we enter the second week of December. The housing market certainly is starting to head towards its seasonal decline or in the middle of it, however you want to look at that. We'll tell you exactly how much as we dive into inventory update as we do every single Monday to kick off. Also, before we end the show, we've got the mashup, the roundup of all of these 2025 market forecasts. This will be a piece of valuable data, the graphs and charts, which will be inside of BAMX. Use code HOT to get inside of BAMX. Of course, the article, everything that is associated with that will be a really good resource for you moving forward over the next few weeks. Put that all together. Excited to get through all of that. But first, let's get into the housing inventory update. Per Altos Research, inventory fell last week. It's typical this time of year. We expect it. If it went up, that would be very interesting. That might even be an indicator of other factors, meaning is the economy doing maybe even worse than some people potentially think it is? But no, it followed norm. It went down. In a time of year, we expect it to go down. How much did it go down? Moved from 706,500 plus on active inventory across the country to 690,000. So we saw an inventory decline of 16,000 plus last week. That is a good size. It's what we would expect, similar to these levels at this time of year. Inventory last year fell about 9,000 in the same week, dealing with much lower numbers, 555,000 to 546. We are now under 700,000 on active, listings for the first time since the end of August, when we broke through over 700,000. 700,000 would be a great number to get back to in January. The quicker we can get back up over 700 and start improving from there. Remember, the peak this year was 739,000 plus on active listings. The all-time bottom was in 22 before those rates started to really take off at 240,000. In 2015, we were at 1,050,000 during this same week, sitting just now below 700,000 at 690,000. Still puts us 26% more than last year at this time. But you do see, if you're watching on the live YouTube, you do see, or the replay on YouTube, you do see the decline on the chart starting to happen now. It in normal years, 17, 18, 19 would have happened even earlier in the year. We haven't really seen that now take shape until the last month or so. Expect that to continue to get deeper on the decline as we move forward here in the last 3 weeks of the year and even early into January. If we look at new listing data, new listings didn't help us this week because we were accounting for the Thanksgiving holiday, of course. So Thanksgiving holiday falling on a later than normal week also brought the new listing data down further than same week looking backwards to the previous years. Okay, 30,000 on new listing data, 43,000 in 23, 39,000 in 22. We're comparing, and like the week before when we looked at it, we had 51,000 versus 28,000. So we were looking at 51,000 versus 28 being, if we look Thanksgiving week over Thanksgiving week, holiday over holiday, we're at 30,700 this year. And last year we were at 28,000. Okay. So we had an improvement on holiday week if you take, apple to apple. But week over week, we're now declined past what we saw last year. At this time, we do expect that this week there will be a bump as there has been in the past. If you look at last year, we went from 28,000 on Thanksgiving week to that following week being 43,000. So I would expect this number to pop. Do we get back up to 50,000? That might be a stretch, but if we could pass the 43,000 of last year and continue to show some small levels of improvement on new listings, I think that would take that as a win. Price cut percentages continue to be in line with last year, 38.4%. Right now at the moment versus 38.7% last year, 22 much higher at 42%. We do expect those price reductions to start to move down over the next few weeks as they have the last couple of years. And as you see that, end out the year, you see less price reductions because you see more people just say, why would I reduce? I'll just take the house off the market, reset come during the spring when there's potentially going to be more buyers. Typically every year there is. This spread is right now, the spread between the 30-year and the 10-year is helping make the case that there could be more buyers because that is obviously having an impact on the 30-year fixed. I'd like to go, here's the one I'd really like to go to, the mortgage purchase application index. This is telling us, in the numbers here, going all the way back to September, that every single week now, when you look week over week on mortgage purchase application, we are flat or above where we were 2023. Granted, we're really picking up from the lowest level since 1995 on mortgage applications, but we're now seeing a consistent improvement over last year, and we're getting pretty close to 2022 levels. And with any more improvement, we could break through and hopefully start breaking out of this really low trend, get back to a more healthy level, which can push up pending sales. Total contracts pending are 13% more than last year, according to Altos Research. And that number right now sits at 315,566, where, this time last year we were just below 300,000 for the same week. So pending sales starting to improve. We get more of those buyers into the market. We'll see more of that improvement. There is your inventory update on the macro. Of course, you should be following very closely where you are in your market week over week. And let's now move over to the big news for rates that ended last week, which was the employment news. Okay. The Bureau of Labor Statistics released their employment report 8:30 on Friday, and it shows that non-farm payroll employment rose by 227,000 in November, and that unemployment changed little at 4.2%. Changed little, still changed. Okay, we were coming in at a 4.1 before that. Mortgage News Daily says that the mortgage rates, which fell on Friday, almost a quarter point from where we were a week ago, or it was a quarter point from where we were a week ago, where we ended the week last week. They fell to 6.68. Mortgage rates fall more than expected after that jobs report. Okay. We were seeing some sign of resilience last week, as Mortgage News Daily states here. But the true test was Friday's jobs report, and we passed the test. Okay. The headline job count was not particularly low, meaning the 227,000 jobs, not a particularly low number, but it wasn't strong enough, they say, to argue against the fact that the labor market has cooled off compared to the first half of the year, or that 2024 is much cooler than 2023. We have all of 24's data now on jobs. We've seen how much they've also revised down on jobs, showing us that, hey, the private job sector is not as strong. When you look at the abundance of government jobs in 2024 has been really driven by that. Okay. And so now we've got a full year almost of data, and it's, pretty clear that this labor market in 2024 is not nearly as strong as what we saw in 23, certainly not 22. And we are seeing unemployment now tick up to support that. We're back at 4.2 when we were just recently last month coming in at 4.1. So the unemployment rate, not, that big spike there is obviously the COVID spike. But the trend here is one that is starting to move up on unemployment. And here's just a look at what 10-year did off of that jobs report on Friday. And we will take moves on the 10-year like this any week, any day. We'll see what obviously happens to today's 10-year. So you had the Powell data here, and now the jobs report. So two big moves down recently, which brought us out of the 7 handle and back into the 6s on the 30-year fix. Right now, just going back to that number, if you didn't follow it on Friday, right now we're entering the week at 6.68 on the 30-year fixed daily survey. The Freddie Mac 30-year fixed weekly came in at 6.69. And so, I mean, if we just look just a week ago, we were, week and a half, call it, we were up over 7%. Right now, the 10-year Treasury is starting the day at 4.176 on the, here we go. Here's the last 5 days. So haven't, moved up a little bit slightly here this morning from the lows, but really over the last week, these are the lowest points we've seen on the 10-year, 4.178. With that jobs report, we are seeing now a 90% chance, 85, sorry, it was 90 before the show started. So market's opening up, and this has moved a little bit, but still in favor of the Fed cutting in 9 days when they do their meeting. So next week's the Fed meeting, 85% chance that the Fed will be cutting according to CME Group. All right, now let's move to the 2025 housing market prediction. Here's 4 charts. You want to grab these, download them easily inside of BAMX. We sift through all of the bullshit here so that BAMX members can just have easy access to the most relevant information in the housing market in front of them. Use code HOT to get into BAMX. Of course, BAMX members are getting the benefit of the Zoodealio platform. You can generate 4 offers on any listing with Zoodealio. You also helps the tools in Zoodealio help you get more listings. Zoodealio platform now available for all BAMX members, absolutely free. So take advantage of BAMX by using code HOT with the link below, and get access to all of the show notes on this show, as well as these charts and everything we're about to go through right now. All right, here we go. 2025 market predictions. Let's first get into, we have this roundup here from, here are the names: Realtor.com, Zillow, NAR, Fannie Mae, Freddie Mac, CoreLogic, MBA, Mortgage Banker Association, Goldman Sachs, Capital Economics, Housing Wire, Wells Fargo, Bright MLS, and Business Insider, which is also via Goldman. So crossover there. All right. So some of the biggest names on the forecast. And let's now take a look at existing home sale forecast. This is one that, for me, I want to see this number go up more than anything to help the fluidity in the housing, industry. More people are going to be able to do more business, obviously, and it impacts a whole bunch of supporting business if we can get some more existing home sales up. Realtor.com taking the most conservative approach here on the list, coming in at 4.07 million. This 4.07 million would not be much of a lift from where we're at right now. NAR comes in at 4.47 million. That would be a huge lift. Okay, that is the most bullish case of the group. In the middle, you see Housing Wire at 4.2 million and Mortgage Banker Association at 4.25 million. When you look, and then you got Wells Fargo there basically at 4.2. Fannie Mae, just under 4.2 as well. But those 4 have in common, they're very, very focused on the mortgage rate and the mortgage industry. When you look at Fannie, Wells, Housing Wire, Mortgage Banker Association, really strong, insights into mortgage. And so maybe, coming in basically, around the same number, 4.2, Mortgage Banker Association being the most bullish at 4.25, give or take over under 4.2, really, there might be something to read into that on how much data they have on mortgage. Zillow is just over those at 4.3 million. And then Bright MLS coming in one of the largest MLSs, of course, at 4.4 million nationally. Okay. So interesting to see there. You've got NAR, MLS, Zillow at the top. You've got some of these, mortgage focused companies somewhere in the middle. And then you have Realtor.com being the most conservative on the list. 2025 home price forecast. Wells Fargo comes in at 4.9%, with Goldman Sachs at 4.4% and Capital Economics at 4%. Those are the only three that have a 4 or above on pricing. In the threes, you have Fannie Mae at 3.8, Realtor.com at 3.7, Housing Wire at 3.5, Bright MLS at 3.1. And then you get step down into the twos with Zillow, CoreLogic, and NAR. Mortgage Banker Association at 1.5% on home price appreciation. An inventory forecast, we're seeing a 10+% bump in inventory from Realtor.com, Bright MLS, and Housing Wire, at 11.7% for Realtor, up to 13% at the high with Housing Wire. So again, these are just forecasts looking forward. The 2025 mortgage rate forecast may be the most important for buyers and for locked up sellers. You've got Goldman Sachs coming in at 6.1%. And you have Realtor.com, Fannie Mae at 6.3 and 6.4, Bright MLS at 6%, NAR at 5.9. Not a lot. Obviously, you just look at this chart, nobody's really saying 5.9 is an average for the year. As more reports we've been covering the last couple of weeks, projections come out, you don't see anybody in the fives. Mortgage Banker Association at 6.4. Housing Wire has a prediction range coming in at 5.75 to 7.25. So, Housing Wire making the case that there could still be an element of the sevens in this coming up year. Zillow and Freddie Mac are just calling for a gradual decline. Don't want to leave them out. Okay. All those charts, as well as the hot sheet show notes, by the way, completely available for you inside of BAMX. So many of you guys are using these hot sheet show notes in your communications with your clients and your customers. We've taken out all the fluff on all of these types of reports and just giving you the data that you need to copy and paste and deliver the information that you need in your conversations. It's all inside of BAMX. Use code HOT to find out more about that. If you want to find out more about the way Zillow's thinking about their forecast, then jump into Knowledge Brokers podcast. We had a podcast on Friday with Skylar Olson, the chief economist of Zillow. That is up now. Haley, if you want to drop that into the live chat, and then even after the show on the replay, drop the Knowledge Brokers podcast. It's on a separate channel, so not here on the YouTube channel. It's on its own Knowledge Brokers pod channel. That video already throughout the weekend performing very well. That podcast, if you listen on Spotify or Apple, is there as well. And you get directly out of Skylar's mouth how Zillow is thinking about 2025. And we also asked her about some of the misses in 2024. So there's a lot in that one. It was a fantastic conversation. I really appreciated having that conversation with Skylar. Encourage you guys to check that out there. And coming up, I think just in days, okay? Just in days on Wednesday. I want to make sure I had it right. The 11th. Wednesday the 11th is the first ever real estate award show that isn't bought and paid for. It's the BAMMys. So join us on Wednesday for our absolutely free virtual award show, which is the BAMMys. This is going to be at is it 2:00 Eastern or 3:00 Eastern? Anyways, there's a link down below. You get all the details. All right. Free virtual event, BAMMys. We also have Neil Dingra, if you know Neil, talking about how to prepare for 2025 as the halftime show for the BAMMys. But most real estate awards are, some scam operation of somebody buying it. This is all being voted on by you. These are real awards in the marketing category of real estate best listing video, amongst other categories. You can see all the information down below. It's 2:00 Eastern time this Wednesday, the 11th. Sign up if you want access to the free virtual event, the BAMMys, the first ever award show, not bought and paid for by the industry. Hope you guys enjoy. Have a great week. We will see you back here tomorrow morning on the hot sheet. Until then, toodaloo.